It doesn't work, okay? There is a limit that you can increase interest rates before the whole system explodes. It's like the central bankers haven't even done the math.
Hey guys, welcome back to the channel. Today we have Bitcoin maximalist Greg Foss sharing his concerns about the direction our economy is going. Greg deems that buying Bitcoin is an insurance on the potential default of some fiat currencies. Foss believes that a formal default of a G7 country may be coming down the line, and that people are paying a premium now because they believe there is a greater than zero chance the US will default. He says the chances of other countries defaulting before the US does is considerably higher. Foss also believes there is something brewing under the surface that the heads of finance are trying to keep hidden by refusing to admit that anything is amiss. Let's check out the interview with Greg Foss. Don't forget to like and subscribe if you enjoy the content we do here on this channel. Let's get right into the video.
Boy, are we in trouble. You've seen some crazy announcement out of the Bank of Japan today, for example. It reminds me of my time in the great financial crisis, when every single day you had some sort of talking head from the finance circles, whether it was the head of Lehman or the head of Bear Stearns. Oh, don't worry, everything is just fine. Nothing to see here. As soon as the talking heads start saying stuff like that, you know that there's some approaching flames, and yeah, a little bit nervous, to be honest. I like to think of Bitcoin as essentially a credit default swap on a basket of fiat currencies. And that is to say that you are buying insurance on the potential default of some of the currencies in that basket. Now, as we know, there have been regular defaults that have happened within particularly emerging market economies. For example, I've said that in my career, Argentina has defaulted 4 times. Well, Argentina is a G20 country. I have yet to experience the formal default of a G7 country, but I believe that is probably coming as well. Anyway, to line up how I value Bitcoin as an insurance policy on these baskets of currencies, look at the current 5-year default swap rate on USA, and that's 20 basis points, which means that it costs you $20,000 a year to insure $10 million of debt on the USA against default. Now, many people say, why in the world would you buy protection on the USA if they can just print money and solve a default by printing more money? And the truth is, that is an excuse. Nonetheless, people still do it. I'm not going to argue with the market. The market is 20 basis points, which means people are paying that premium. Why are they paying that premium? Because they obviously think there's a greater than zero chance the USA can default.
Foss surmises what it will take for Bitcoin to go back up, and will be something that no one sees coming, such as Russia trying to price natural gas in Bitcoin instead of fiat, or a central bank of a large country. Russia discloses that they have collected a specific amount of Bitcoin and plan to collect more, and realize that every asset is being debased. He has also observed that business confidence is at rock bottom, which is extremely detrimental to the economy.
What is it going to take to see Bitcoin go up again?
It will be some sort of event that comes out of left field. Something like Russia pricing oil and natural gas in Bitcoin. Something like a central bank of a large country divulging that they've accumulated a certain amount of Bitcoin and plan to accumulate more of it. Or perhaps it's nothing more than education, where people realize that every single asset in the world is being debased because of the Fed policy. Let's get on board an asset that is programmed to increase in value, whose monetary supply is written in math and code. So education's the long run. The short run would be something like an announcement. And then the real one will be, or a very potential one, is when the Fed pivots. The Fed pivot will increase values of or stop the bleeding in a lot of risk assets. And unfortunately, Bitcoin is still traded as a risk asset, even though, as you know, I think it should be traded as insurance. I'm not bigger than the market. You got to watch what the market's doing, not what you believe. So lots of ways it could happen. But unfortunately, there's lots of ways it could still, experience some downdrafts, no question.
Well, I know you don't have a crystal ball, but just given the macro environment right now, what will spark the Fed to pivot? What do you think is going to break down in the system, knowing everything that's happening from Europe to Japan and beyond?
Look, Japan. I mean, there's all sorts of things that could happen. You already have some Fed governors that are talking back the assumed 75 basis point increase that's coming in the next 2 weeks. There's Fed governors are smart enough to read financial markets. Today's close on the equity markets was pathetic. Financial stocks took a huge gap lower at the end of the day. Business confidence is at all-time lows, literally all-time lows. This is not good for the economy. And the USA is going to have to choose whether it wants full employment or control inflation, but it's not going to be able to do both, okay? The likely pivot comes, in my opinion, where they change their inflation target, where they move it from 2% to something like 4%. Then they declare victory and say, okay, so now we have 4% inflation targets, so now we can afford to stop the tightening cycle. It's always that, Nat. It's always smoke and mirrors with the Fed. They talk a big game and then they pivot because the markets and the US dollar global wrecking ball is destroying emerging markets right now. Historic losses in emerging markets. Well, when you have historic losses of capital in emerging markets, those are your trading partners. Those cause global GDP to decrease. A global depression is in the offing, and I think the Fed will pivot. I'm not certain of it because I think that Jerome Powell is not the right man for that chair. He's a lawyer. He is not a risk manager.
Tell us, what's one thing that central bankers are doing right now and the biggest thing they're getting wrong?
I honestly cannot think of anything they're doing right, okay? Like, I think they are absolutely very juniors in the room. They are not listening to the markets. They are using backward-looking data, okay? Employment reports are backward-looking. They're not looking to financial conditions. They're not looking at credit spreads. They're not looking at the jamming up of financial markets. This is a situation where you have a guy that's trying to be like the old Paul Volcker, okay, the Fed chairman in 1982 that arrested inflation in 1982. The difference is that the debt situation in the world is about 3 times larger than it was when Volcker used the same tactics. It doesn't work with a global debt spiral that we're in, Nat. We've talked about this. Someone asked that question. Total global debt to GDP is 400%. It doesn't work, okay? There is a limit that you can increase interest rates before the whole system explodes. It's like the central bankers haven't even done the math. It's very concerning. So I'm afraid I can't think of anything they're doing correctly. If they laid out that they've actually done the math, then I'd have more confidence in it. I don't believe they've actually done the math.
Foss has also been seeing a lot of signs that the global financial system is about to implode. He has also noticed that the bankers have not been listening to the markets and have been using backwards data. Bankers have also been incompletely ignoring financial conditions, credit spreads, and the fact that the market is being ground to a halt. He says that the US will have to choose between full employment or to control inflation, and that both are not an option. Guys, thanks so much for watching. Don't forget to like and subscribe. This is Library of Wealth. We'll see you in the next video.